prices continue rally. Rising geopolitical tensions in the Middle East also give rise to oil quotes. Brent is now holding near the multi-month highs, thus supporting the Russian ruble. The ruble also benefits from the peak of the tax payment period in Russia due on Wednesday. The energy market is still evaluating the news on coronavirus vaccine. It's expected that the US and other countries could start COVID-19 vaccination as early as December. Reportedly, the majority of the population is likely to get vaccinated by spring or mid-2021. Therefore, investors have a strong reason for optimism as the fuel demand is set to increase. However, the outlook for oil remains gloomy in the short term. The rising number of coronavirus cases in the US will limit the activity during Thanksgiving Day, and this means that the market will not see a traditional increase in oil demand during the holidays. Brent oil futures for January gained nearly 1% to trade at $46.40 per barrel. Likewise, WTI crude edged high and settled at 43.30. On Monday, both benchmarks reached their highest level since August 26. Today, Brent is expected to stay in the channel between $45.80 and $46.70 per barrel. Oil prices also surged on news about a missile attack on Saudi Aramco oil distribution station. The Saudi Ministry of Energy confirmed the attack, and at the same time, the company's officials did not give any details, saying that the oil refineries continue operating as usual. The Yemeni Houthis claimed they were responsible for the attack and threatened to continue such operations. 1 year ago, they used drones to attack the Saudi Aramco targets, including the world's largest oil processing station. This caused Saudi Arabia to seriously cut its output volumes. Given the current geopolitical tensions and the fact that traders downplay the risks of renewed lockdowns, Brent may well rally to $50 per barrel. The background remains positive as markets anticipate a peaceful transition of power in the United States. Donald Trump has finally given the approval to proceed with the transition to Joe Biden's administration, although he still challenges the election results. This means that the political uncertainty in the White House is almost over. And this news, along with the prospects of vaccination in the near future, boosted the demand for high-yield and commodity assets. On Forex, commodity and emerging market currencies are gaining ground, while the US dollar index has fallen again after a failed attempt to recover yesterday. The dollar-ruble pair lost about 0.3% from yesterday's close and reached September lows. The US dollar was last seen trading at 75 rubles 93 kopecks. The ruble may well test the 75.50 area after gaining support from the peak of tax payments in Russia. However, the ruble is unlikely to show sustainable growth. The end of foreign currency sales by non-resident companies to pay taxes and a possible correction in oil prices may trigger a new round of devaluation in the ruble. The ruble is expected to test the area of 78 against the US dollar. Currently, the dollar-ruble pair has found strong support at the level of 75, and the bears will need strong reasons to push the pair below it. That's all for now. Thank you for watching and stay tuned.